Now, I don't normally seek information, especially from the mainstream media. I don't have to look up articles. Articles kind of come to me. Some of the stuff I do subscribe to, and one of those blogs is armstrongeconomics.com/blog, and he had this very short article I'm going to read to you. We're going to click through to another article, and then I'm going to show you a quick infographic video that shows the breakdown of the prices in the different cities across Australia, the winners and losers in the last quarter. So this article is titled "Housing Begins to Crash, Australia, New Zealand, London." Property values are starting to crash hard in Sydney, Australia, New Zealand and London. Politicians are simply idiots. They all targeted foreigners buying property as the leading cause for the rise in housing prices. What they fail to grasp is that people spend more money when they think they have equity in their home. Whenever housing starts to decline, so does consumer spending, and guess what? You get the economic downturn. Duh. Then we click through to the actual article that says Australian home prices fell in final 3 months of 2017, and that says that Australian home prices fell in the final 3 months of 2017, the first such decline in almost 2 years, as the nation's biggest market, Sydney, continues to cool. Values nationally declined 0.3% in 3 months to December 31st, the first such drop since the period ending April 2016, according to CoreLogic Incorporated data released on Tuesday. Prices in Sydney dropped 2.1% in the quarter, dragging the city's annual growth rate to 3.1% from 17.1% just 7 months ago. Sydney's housing market has become the most significant drag on the headline growth figures, said Tim Lawless, CoreLogic's head of research. This is the nation. This is the graph. So we've got the Sydney there. We've got Melbourne still doing all right, and nation's average is also under the water in this last quarter or last month. The once red-hot Sydney market is cooling after regulators clamped down on interest-only mortgages typically favoured by investors. Rising state taxes have also made housing more expensive for foreign buyers. This is true. CoreLogic said it sees softer conditions throughout 2018, driven by the slowdown in Sydney and to a lesser extent Melbourne. Melbourne home values fell by 0.2% in December, the first monthly drop since February 2016, paring the quarterly gain to 0.9%. The data shows the market in the nation's second biggest city is more resilient due to stronger population gains. I don't know why anyone wants to live in Sydney, in Melbourne with that weather, yet Sydney is not much better with pollution and the traffic. So population gains, a higher rate of jobs growth apparently in Melbourne, and better affordability according to CoreLogic. Values fell a combined 0.5% across the state and territory capitals during the quarter, including 2.9% drop in Darwin. Hobart, the state capital of Tasmania, was the best performing market with a 3.1% gain. Shane Oliver, chief economist at AMP Capital, said prices in Sydney and Melbourne could fall by around 5% this year. Alright, this year, 2018. Let's see how that goes. Still, low interest rates, he says, and support for first home buyers are providing some support and should help ensure only moderate price falls, Oliver said. And the quick infographic with the prices and the breakdown of those for the nation of Australia for the final quarter of 2017 are as follows. Well, alright, that was it. It's only January 2018. Happy New Year, everybody. Have a good one, and I'll talk to you in the next video.